Big decision day for the Federal Reserve. The central bank signaling 3 interest rate hikes may be ahead in the new year. For more about what this means for American consumers, we're joined by Nick Bunker, Economic Research Director at the Indeed Hiring Lab. Thank you for joining us. First, let's dive into today's decision. The Fed chose not to raise interest rates for now, but they did a number of things to lay the groundwork for those rates to go up next year. In addition to speeding up the wind down of its stimulus program, they are no longer calling inflation transitory. And I want to ask, how do you read that language around inflation? Are these high prices here to stay?
So while the Fed did take out that term transitory, their outlook for inflation does show things slowing down a little bit. For example, in their summary of economic projections, they're showing inflation, getting down closer to 2.5% over the next couple of years, which is above their target, but obviously much lower than the really high rates of inflation we're seeing right now.
And I'm actually old enough to remember the last great inflation in the country back in the 1970s, and it was demoralizing. For an ordinary American family like the one I grew up in. I remember my mom kind of freaking out every time she came back from the grocery store. She had 10 kids to feed, and the price is going up every week. So what can consumers do as you look ahead? I'm happy to hear that you think the inflation is going to go down again. But what kind of decisions do you think consumers can make that are smart before the interest rates start climbing in order to combat whatever level of inflation we're going to have?
Yeah, so I think one of the good things is that while inflation is still high, we are seeing fairly rapid wage gains. Of course, they're not as fast as inflation. But when it comes to what consumers can do, I think if there are, say, some big purchases, like, say, a car or a used car in particular, we're seeing really high prices. Maybe folks can delay those purchases a little bit with hopefully the supply chain comes online. But I do think that to a certain extent, there are just some areas of the economy where maybe prices will be a little bit higher than we'd like, and hopefully that trend will just abate a little bit over the next couple of months or into next year.
And Nick, how do you see these new concerns, and are there new concerns really about the Omicron variant and how they play into the Fed's roadmap? Will interest rates go up even if this variant really takes hold in the U.S.?
That's one of the key questions for next year. In the Fed's statement that they released earlier today, they did mention that variants of the virus was probably the biggest downside risk to the economy. It's really unclear now what the Omicron variant is going to throw at us. Obviously, cases are rising really quickly in certain states and in other countries, but it's not clear what the economic response will be. So that's something that the Fed and other central banks across the world will be watching intently over the next few weeks as we get more information.
That's for sure. We'll all be watching it very intently. And Nick Bunker, thanks very much for joining us and helping us understand it a little bit better.
Thanks for having me on.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.